Hey, good morning. April 15th, tax day. It's 9:30 Eastern. The markets have just opened, and I want to give you a quick overview of my thoughts on kind of where we go next. First and foremost, I have a very bearish bias. I've been bearish since January, and I've only become more bearish every single day, regardless of positive price action or upward momentum, which is what we've been seeing for the last week or so across all markets. The primary drivers for me of things I'm looking for from a macro standpoint are gold, oil, DXY, the dollar, and treasury yields. So for right now, those to me have been kind of giving me guidance on when to be aggressive or not with stocks and crypto. For the most part, the only opportunities I've been looking for is shorting, like respecting the trend, the downtrend overall that we've been in for a while, and looking for areas to short. The reason I'm looking at gold and oil specifically is that it's giving me more indication of when the next possible move is coming as we are entering into a recession, or what I believe we are already in a recession without the actual official data points to support it. That said, gold has been extremely strong. As of right now, I think everyone is expecting a pullback, which I could probably argue as well. But in the end, I think gold will go much higher. I saw Goldman Sachs came out yesterday. Take it as what you will for an investment bank, but I think they're targeting like 4,000 by the end of the year. But gold, strong when people are concerned. It's a safe haven in the past, especially when heading into uncertain times like we are right now. So I expect that to still be strong. Any pullbacks, possible area of interest for longs. Oil, on the other hand, extremely weak. Oil has been very, very weak because of lack of demand and other factors as well. So this is essentially inversely related, not directly, but for the most part to gold. So any opportunities for this, for oil, on moves up, I think is a great opportunity to short, if you know what you're doing. Anywhere between $62 and $67. $68 was a very, very, very important level that has been held for a significant period of time, and losing that, everything below here is bearish to me. Silver, interesting. I very much was into silver for a while. This sell-off I don't like that happened last week due to it's a factor inside the manufacturing cycle itself. Regardless, this is a nice recovery. I think with silver, it would probably still follow gold. I'd be looking for, if you were someone looking to get in, maybe a pullback here into the 30s, 31, or a bigger move up here above 34 to long. But as of right now, I don't like where it is generally, just because it has to recover after this pretty strong sell-off in early April. All right, indexes. We briefly just peeked at the S&P 500. This is not normal price action. If you're someone who's new to trading, the best thing you can do is just sit and watch, because you're going to be pulled all over the place, and this is just not, it's not attractive. To me, everything below like these highs, like this is last in early April, is where I would be still bearish. Or above here, I'd be consider being bullish. A lot of other boxes to check, but this is a start to see some recovery. But as of right now, I think really what you're looking for is areas to short, which in my opinion is anything between here, which is like 5,500, like this red, 5,500 and 5,650. So it moves up here to this area, there is liquidity, and then look for weakness, and ideally would short there. NASDAQ, same thing, looks the exact same. Easy number for NASDAQ to remember is 20,000. Anything under 20,000 as of right now, where price is, I'm bearish. Under 20,000, bearish. Easy number to remember. We have seen some strength, and I would think in general, just how things are shaping up, that we may see some more kind of action trying to get people to chase up here. It's these higher numbers. But again, I'll be looking for a move back down. Even if it does poke above 20,000, same thing. Just looking for weakness to come back down. Russell will skip, same thing, no changes here. VIX, it's just been wild. This is just interesting to watch as of right now. Not entertaining the VIX. All right, DXY. This is probably one of the most important ones. So this is the dollar. As of right now, the strength below, or lack thereof, I'm using this as a gauge, as basically the trust and confidence in the United States. In the past, I wouldn't have used it as such, but like just to me, this has kind of been that indication of confidence in the U.S. and treasuries overall. But this weakness is due to a lot of factors, but for the most part, there are definitely folks selling treasuries, and the value of treasuries is going down. And inversely related then is your yields. So your yield on your 30-year and your 10-year of the bonds of the treasuries is extremely strong. Now, I could see a possible pullback down here into maybe like these, the 420s, 415, but when this thing starts moving up, like above, because this is the 10-year, above 4.5, that to me would be the final, the red flags for me overall for for the bigger move down, which I'm still anticipating. Not trying to catch the move down, but just be aware of it. So if gold's on the up and up, oil's weak, DXY, the dollar's weak, and you start seeing treasuries yields skyrocket, your risk on assets, someone would be very bearish. As of right now, I still think things are very, very overinflated. The stock market as a whole does not reflect actually what's going on that's inside your business community. Business sentiment, very far down. Consumer, your confidence, I think the lowest of the last 40 years. I can name 100 indicators right now that are screaming recession. Not absolutely implying that's absolutely happening. However, this is a time to be cautious and to not overexert yourself into listening to this influencer as telling you, hey, it's the best time to buy the dip, blood in the street. No. When that time comes, it'll be very clear we're back in an uptrending market and there's confidence for more upside. But as of right now, you got to zoom out, have to respect the bigger picture. And, oh, I forgot Bitcoin. Got Bitcoin. Here's Bitcoin. So crypto, Bitcoin's been in a downtrend since January. Now, this is the first time we've seen in a while for it actually to show some breakout, essentially. And for me, I have another Bitcoin chart here, but I don't have it present. But I'm still looking for weakness to come back down and then go right back down to the downtrend that's here. Fall right back in. There's a false breakout. That's what I'm anticipating. I would love to be wrong because being a bull is much better than being a bear. But as of right now, anything under 90K for me is still bearish. If the day comes when we start trading back above 92, like way up here, 92K, but for a sustained period of time, not just immediately starts pumping up there because of some announcement that came out, but trading above this level for a long period of time, I would then be interested because now we're in an uptrend and there's confirmation of strength, which are two of the couple indicators that I need, at least from a price action standpoint, of when to be interested. Solana, clear this chart here. I think everyone knows my stance on Solana. I still believe you're going to be able to buy Solana at a much lower price point, back below $100. So as of right now, the bigger the move up, if there is a move up, just more opportunities to short. These will all be short-lived. No pun intended, did this. Just rolling right over. Or today, roll over here. Crypto is a function of equities. Whatever the equities do, crypto is going to follow. There is no decoupling. If that day does ever come, it's not going to be a good thing. We don't want that to happen. We need to have a slow transition of how those systems work together. But as of right now, crypto is a small component of your larger global markets, no matter what anyone tells you otherwise. Same thing. Look at this. Oh, it's sad. I gotta respect the trend. Like for me, if I'm like, I'll pull up my hammer here. Like every single time. Hammer, rejection, rejection, rejection. So why would I think otherwise here? Why would I not believe that ETH is going to reject again? If it pushes through, we start trading back above $1,800 to start. All right, we'll talk. But as of right now, I have to consider this is going to reject, just like it would, just like it has in the past. And that's it. XRP, because everyone loves XRP. I don't know. I think this also has shown some weakness. Also, a lot of manipulation going on here. I would consider maybe being bullish on XRP again above 230, 240. Up here. But as of right now, I think this will roll over too. That's it. All right, so that's it. So be cautious, watch, don't overextend yourself. And yeah, remember the price on the can. Have a nice day. Take care.